Alright, hey guys and girls, how's everyone doing? I hope you're all doing well and had a great holiday break. So this is going to be the first video for the new course over some price action. I actually wanted to review my first trade of the entire year, okay, on the 14th of January. So starting off, we can see that throughout the week on the economic calendar, we had CPI on Tuesday, which I was waiting for and decided to skip Monday because I really wanted to see what this would do for the weekly ranges, right? And then on the Wednesday at 8:30, we had the PPI numbers, core retail sales, etc. So jumping over to the price action, here are the three time frames that I used. I did use the 5-minute and the 1-minute for entry purposes, but I started off on the daily. So we will go here, and just quickly, as we can see, price is a little bit sloppy, but after taking these stops down here, it's had a nice rally, returned back to a discount to this suspension block, and we've just rallied inside of this range. Now, I have been bullish, and I did want to see us reach into this gap here that was not balanced. Okay, so this is a volume imbalance, and clearly, as we can see, we've had little to no trading on either side. Okay, so disregarding this wick here, this area of this volume imbalance is completely inefficient. So I was looking for the week, as we've only wicked up into it a couple times, I was looking for the week to trade up and use it as support to hopefully go higher, and then trade into this SIBI that only had downside delivery and fill it with upside delivery to rebalance it, okay, make it efficient. But instead, what we've seen, okay, is we've got our Monday here, okay, we've got our weekly open. Price came up, and on the Tuesday with CPI, it hit into this volume imbalance, and we can see the rejection away, okay? So then when I jump on the 1 hourly, we can see our weekly open here, if I'm delineating midnight Monday, and we've traded up, had this large manipulation imbalance here, okay? And we traded up on Monday into that volume imbalance. We came back down into this BISI, and then we traded up one more time, CPI making the high of the week so far here, okay? Now, what is also important to note is, one, we've reached this premium array, okay? But we've also had an SMT here with ES. So once we started moving around here and then we dropped off below this low, we retraced to this inversion, really reclaimed, okay? We're using it as like an inversion theory, but this is a reclaimed SIBI, all right? Now, this would be your market maker model low risk sell. Now, how can we trust this? Well, look at the weekly range, okay? So we've opened up here, we've gone higher, we touched the premium array once, we went down into this SIBI, into this BISI, sorry, and then one more time we went above these highs. Long wicks rejecting and closing inside this high here, okay? And then with this SMT divergence, this is a big cracking correlation with a previous month's high, okay? Then we start falling off lower. So everything is telling me that we are looking to go lower to fill this market maker model, which would look like this, okay? The left side of the curve, right side of the curve, okay? So initially I was looking for these stops, and then if we measure this, the fib from low to high, we can get the equilibrium point here and OTE. Sorry, the equilibrium point here and then OTE areas down here, which I wanted to see reached, okay? Now, what is below these stops, okay? Well, if we're looking below these stops here, if we're looking for it to continue down to OTE, we could look at these equal lows here and this low here, but I thought it was more important. Again, if you remember what I said before, volume imbalances are really strong magnets on price and very strong draws. Why? Because this here, disregarding these wicks, is inefficient in buy side and sell side delivery, okay? So the market is going to want to come back to these to fill that, all right, to rebalance the market. Now, also, you can see that this volume imbalance lines up perfectly with the CE of this suspension block, okay? So that's converging arrays, giving me higher probabilities that I believe this will be reached. Now, to add even more confluences, I personally love grabbing a fib and putting it from the, in this bearish case, high to low of the smart money reversal and then projecting that lower, and I find that 2 to 2.5 standard deviations is reached a lot, but I will do a further video on that in the future. But for targeting purposes, we can see volume imbalance in a discount, deep discount, overlapping with the CE of this daily suspension block, and also at the same area of the 2 to 2.5 standard deviation projection levels of the smart money reversal. Okay, now as we are drifting off lower, this is the daily open right here for Wednesday, okay, in Asia. The new day's open. We're rejecting off here, distribute lower, respect this civvy here, which I haven't annotated, and then have this large rip lower through these lows. Now, displacement through lows is very significant. Again, we'll touch more on that in future basis. Price retraces from New York open right here, okay, at 7 a.m. into this civvy here, and then falls off lower. Okay, now I actually only got to the charts at about, honestly, maybe 9:30 on the dot, maybe a little bit after. So I didn't participate and sell short from this civvy up here like I would have loved to do. I had to use price delivery continuum to go onto the 5-minute, and this is that rejection off that civvy right there, as you can see. Go back up here and also mention this. As we can see, we've got our weekly open. Now, if we're trading bearish inside of our weekly open, we can also use the midnight open, and we can see that from all these opens, we are just dropping heavily. Okay, so this is telling me there's barely much manipulation above these opens. Price is heavy to the downside. We're in a rush to go lower. All right, once we reject it off here, we can also look at this 8:30 candle. Again, barely any manipulation from the PPI numbers and retail sales, right? Couldn't even reach the midpoint of this 1 hour civvy. Okay, so that's indicating weakness. Now we fall off, 9:30 comes and gives us another retracement back to this 5-minute civvy here, and then also the low end of this 1 hour civvy, and we drop off. Okay, now admittedly I did use the 1 minute for my first entry. My first entry was right here inside of this civvy. Okay, this 1 minute civvy, and I rode price down to this sell side, which is this low right here. Okay, now I took my profit here and I moved my stop loss to break even. I actually put it right above this high right there. Okay, now obviously price retraced, and I was okay with that because I took 1.5 R and moved my stop. Even though I was targeting down here, I was fine with that. It wasn't a loss, okay? But then what I did notice as price kept trading, as I didn't see a case for that to be a reversal, okay? Because I believe we had lower objectives. So I waited for this retracement, and then I actually used the 5-minute once we created this civvy right here, okay? That I will quickly highlight for you. Created this civvy inside of this BISI. Okay, and we broke below the midpoint of this inversion fair value gap. All right, so I sold short right in there on the 5-minute. My stop was above here, and I just rode it down. So sold short there, rode it down, rode full profit down to here. Okay, so didn't mind this retracement back to this old low, as well as this civvy in here, touching this propulsion block. Yeah, just wrote it down. Look at this amazing rejection right off our target, right at that CE 2 to 2.5 standard deviation level, and discount volume imbalance on that 1 hour. Okay, so really that's all without going into too much detail, as I don't want to spoil a lot of the amazing insights that I'm going to give you in the rest of the course. This was just a quick rundown of my first trade of the year. I hope you guys got some great insight for it. I'm looking forward to speaking to you with more and teaching you guys some more stuff. All right, so take care, guys, and peace.